All right, today we're going to do lesson 1.2, which is how business activities change the accounting equation. We have 3 specific learning targets for this unit. The first one, you will be able to classify accounts as assets, liabilities, or owner's equity, and demonstrate their relationship in terms of the accounting equation. Our second learning target, you will be able to analyze the effects of transactions on the accounting equation. And I know right now you don't know what all of that vocabulary means, but you will learn all of that in this unit. And your third learning target is distinguishing between cash and on-account transactions. So first we are going to learn what the accounting equation is. First, you need to know what equities are. Equities are the financial rights to the assets of a business. There are 2 types of equities. The first one is called a liability. A liability is anything that you owe to another person or to a company. The second type is called owner's equity. Owner's equity is the amount remaining after the value of all liabilities, which again, liability is something you owe, is subtracted from the value of all assets. Remember from lesson 1.1, we learned that assets are anything that you own. So you take the amount of things that you own, subtract what you owe, so assets minus liabilities, and you receive your owner's equity. So the relationship between assets, liabilities, and owner's equity is called the accounting equation. So let's actually see what this accounting equation looks like. When looking at the equation, you usually start on the left-hand side. Assets are always depicted on the left-hand side. As you continue from left to right, assets should always equal liabilities, which again is what you owe, plus your owner's equity. Another way to look at this is the left and the right side of the account. Assets always have their amount on the left side, and liabilities and owner's equity always have their amount on the right side. When you are doing your accounting equation, it is absolutely vital that your assets equal your liabilities and owner's equity. Or in other words, the 2 sides of the equation must always balance. All right, here are 4 more vocabulary terms for you. Any business activity that changes assets, liabilities, or owner's equity is called a transaction. After each transaction, you must be sure that your accounting equation will balance. We will look at some transactions in the coming slides. An account is a record that will summarize all transactions that relate to a single item. Each account is labeled, and it's labeled with what's called an account name. Examples of different account names are things like cash, supplies, or accounts payable, like we covered in the last unit. An example, cash is the amount, or the account, that summarizes all of the assets that are cash. So cash could include things that are like a bank checking account, a savings account, or it could also be like actual physical cash that you have on hand that belongs to the company. When you calculate the differences in increases and decreases in the account, you get what's called the account balance. So let's look at a few transactions here. First, we are going to look at receiving cash. In accounting, receiving cash will always mean that cash will increase. All of the transactions that we'll do in the next couple slides relate to Delgado Web Services, which we learned about in lesson 1.1. Just a reminder, Michael Delgado started a website company, and it's brand new. He hasn't had any business as of yet. So the first transaction occurred on January 2nd, and we received cash from the owner as an investment in the form of $2,000. So first, remember the accounting equation. Assets equals liabilities plus owner's equity. You need to add the account titles that we will use. So asset is cash. You remember we received cash, so we add cash to our asset, or the left side of the accounting equation. Because you add something to the left side, you also have to add something to the right side. And in this case, it's not a liability because we don't owe it to anyone, so it will be owner's equity in the form of Michael Delgado Capital. Because it is a brand new company, we start with a beginning balance of 0. 0 cash, 0 liabilities, and 0 owner's equity. But back to the transaction. we received cash from the owner, so cash will increase by $2,000. So you add $2,000 to the asset or the left side of the equation. And because you added to the left side, you also have to add to the right side. So our capital is going to increase as well. After completing the transaction, you need to calculate the new balance. So what you do is add 2,000 plus 0, and you get your new balance of $2,000 on both the left and the right side. Next, we are going to look at paying cash. It's exactly the opposite of receiving cash. Paying cash will always make your balance go down. So our second transaction occurred on January 2nd. We paid cash for supplies in the amount of $165. Always look and start with your accounting equation. Assets equals liabilities plus owner's equity. We carried our beginning balance forward, which is $2,000 in cash and capital. But then we are now paying for supplies. You'll notice in the assets side of the equation, we only have cash. We don't have supplies. We will own the supplies, so therefore they're an asset and appear on the left-hand side. So we need to add supplies to our assets. We are paying cash $165 for supplies, so your cash will decrease by $165, but your supplies will increase. Now, because we had two transactions on this, or two parts of this transaction on the same side of the equation, one must increase and one must decrease. So you can see here we paid cash for supplies. Cash went down $165 and supplies went up $165. You then need to do a single rule and calculate your new balance. You can see if you add $1,835 plus $165, it should equal $2,000, which continues to balance with our capital on the other side. For transaction 3, we paid cash for insurance. This is a very similar transaction like we just did. So we pay cash for insurance. We do not currently have insurance listed as one of our account titles, so we need to add that. So we're doing cash and prepaid insurance. We're paying cash $900, so we subtract 900, but we have to add 900 into our insurance. And we carry our new balance forward. If you add 935 plus 165 plus 900, it should equal 2,000 and balance with our owner's equity. Paying on account. By buying an account, it means that you receive the goods now, but you actually pay for them later. So what we need to do is add the accounts payable to the equation. If you owe money to Canyon Office Supplies, it appears under liabilities because, again, you owe the money. This appears on the right side of the transaction. Carrying our balance forward. Our supplies are increasing because you're buying supplies for $220. But because we added it to the left side, we have to add it to the right side. So we're adding $220 under our accounts payable. After your transaction, you calculate your new balance. Because you added it to both sides, it should still equal. And this transaction is complete. At this point, I would like you to pause the video and try and do transaction 5 on your own to see if you can figure that one out. Okay, so let's look at our solution for transaction 5. On January 9th, we paid cash on account to Canyon Office Supplies. So what this means is you are paying Canyon Office Supplies for the supplies that you previously bought. So how it will work is your cash will decrease, but because we're decreasing on the left side, we have to decrease on the right side of the equation as well. You're paying it off, so if you calculate your new balance, instead of owing Canyon Office Supplies $220, you only owe them $120 because you paid them $100. This is the last transaction that we will go through for this lesson. So this should look familiar. Audit your understanding. We did a couple of these questions the other day. At this point, you should pause the video and answer the 3 audit your understanding questions in your notebook. Remember, you must always, always, always write in complete sentences. but feel free to rewatch the video to try and help you formulate your answers to these questions. When you're done, don't forget to continue the video to see your homework. For your homework tonight, you should create a vocabulary list based on the lesson 1-2 vocab. I did cover some of this vocab in depth in this video, so feel free to rewatch the video, or also look at lesson 1.2 in your book to kind of get a feel for the vocabulary and get that written down. Don't forget that we will discuss the audit your understanding questions in class tomorrow, so be sure you have those complete. And if any of the concepts from the video were confusing or unclear, be sure, first of all, you watch the video again, but second, make any notes or comments in your notebook, and we will go through those questions in class tomorrow. Otherwise, good luck with your vocab, and I hope you have a great night.